Good morning, Mark Soderberg with ADM Investor Services with your morning ag outlook for Tuesday, October the 8th. Well, a lot of red on the screen here this morning as prices are lower across the board. Soybeans seem to be leading things lower, down about 14 cents at the moment, a few cents off overnight lows. Meal prices are down $3 to $4, while bean oil is down about 70 to 75 points. Feed grains also lower. Corn 2 to 3 lower. We're about a penny off the overnight lows. Wheat seems to be holding in the best right now. That's steady to about 2 lower. Markets just seem to be placing a greater deal of confidence in prospects for rain across some of the dry areas in central Brazil, that by the latter part of this week. The transition out of their dry season has been slow and has triggered just modest planting delays so far. It does look like scattered rains will develop by late this week, with better prospects for improved coverage and rainfall totals next week. Argentina also appears that they'll have several opportunities for rain over the next few weeks as well. Hurricane Milton is barreling towards Florida's Gulf Coast as a Category 5 storm. It's expected to make landfall as a Category 3 storm on Thursday, traveling across the state, causing significant property damage from the high winds and heavy rains. Very little crop damage is expected except for orange juice. The U.S. Midwest is expected to remain warm and dry in a warm and dry pattern now for the next 2 weeks, enabling harvest to move along rather quickly. Yesterday's crop progress and condition report showed corn ratings held steady at 64% good to excellent, while harvest advanced only 9% to 30% complete. That's versus 31% a year ago, and the 5-year average of 27%. Farmers were focusing their efforts on soybean harvest last week, as that advanced 19% to 47% complete. That's well above both year ago and the 5-year average, and I see it as the fastest pace for early October in about 7 years. USDA reports on Friday. We're looking for corn production to slip 21 million bushels to 15.145 billion, with an average yield of 183.1. While still a record yield, it would be down from the USDA forecast in September at 183.6. We've got carryout dropping to 1.940 billion. That's down 117 million from the USDA in September. Both our production forecast and ending stocks are just a touch below the average trade guesses. On soybeans, we have production at 4.610 billion. That is 24 million above the USDA forecast in September. We've got a yield at 53.5, also a record high. The average trade guess is looking for a modest 5 million bushel reduction in production. We've got ending stocks up 10 million to 560 million, and that's about 15 million above the average trade guess. In wheat, we've got carryout just below 800 million bushels, mainly due to higher exports, and it is among the lowest on the range of guesses, and about 20 million bushels below the average trade guess. Lower overnight here, driven by favorable weather both here and in South America. Also pullback in energy prices. Wheat prices are holding in here the best as tensions in the Black Sea remain elevated, as there has been an increased number of missile attacks in recent weeks on vessels transporting grain. In the short term, I think it'll be important for December corn to hold above that 420 level. Nove beans with the declines here overnight were quickly approaching support at its 50-day moving average at 10.5. Thanks for listening, everyone. I hope you have a great day.